Certainly, the debt issue, I think, is still one that investors need to keep very much in a close eye on. And it would be nice to say that with the governments, and especially our own, having come to grips with so-called fiscal consolidation, that the debt issue is under control. But of course, all that's happening here is that the rate at which debt is increasing is slowing down, and effectively we're substituting one form of overdraft with another form of overdraft. And so is this a solution to the problem? Well, from an investor's perspective at the moment, funnily enough, it does seem to be. So stock markets appear to be relatively relaxed about this issue. I think here we're not quite so relaxed, actually, and I think we still think there's a risk here that this can unwind in a way that will be quite disruptive to markets. But for the time being, the equity investor appears to be getting the benefit of this glass being currently half full. Over the last year or two, we've been consistently talking about the outlook for the income fund, the strategic assets and strategic bond fund, and the special situations fund. And for all of those funds, the outlook remains very interesting. But what's actually caught my eye now, looking back over 2010, has been the turnaround in the fortunes for the three funds that we run using our SmartGARP stock screening tool: the European Fund, the Global Fund, and the UK Capital Fund. And it's interesting here that after 2 very difficult years, when investors, not surprisingly, started to lose confidence in whether or not this process could still work, 2010 has been really rather a good year. And of course, against the environment that's unfolding, this could remain the case, because now that we're getting a slightly more normalized response from the economy to the environment that we're in, and given that stocks are starting to respond to that, investors are starting to behave in a more rational and consistent way. And ultimately what SmartGARP needs is for investors to be hunting around looking for the companies with the best growth prospects, the best revisions to earnings, representing good long-term value. And in that environment, SmartGARP's starting to get traction. So if you're looking for one against the common flow of opinion, then this is something that's caught my eye, and I think investors should just keep a lookout for it for themselves. 2010 actually has been another really quite good year for investors, and with all the volatility and the distractions going on with the worries about the euro and so on, it's easy to forget that. So this is the second year now that investors have had really quite decent returns. So what is the outlook going forward? Well, the interesting thing is, because markets took such a bashing in 2007-8, that valuations are still really quite encouraging. And given the strength in balance sheets and cash flows, even though these concerns regarding debt markets have not gone away and may indeed come to bite us in 2011, the chances are that the right investment strategy is going to be to remain fully invested. And as ever, the key for private investors is to make sure that your basic asset allocation is right, that you're not overcommitted to equities, but equally that you've got a full weighting in equities, because they're not expensive. So we're actually looking forward to the future with a fair degree of confidence at the moment, albeit extremely wary about the sovereign debt problem.